Good morning, traders. This is Tony D from easyMarkets in Sydney. We have the Aussie jobs numbers coming up in 3 minutes. We're going to be doing that live in this video just so you can see a little bit of how do you approach trading, how do you approach the big events if you're not in the market or if you are in the market. I'll just run over the expectations are quite strong. We are looking for an update of around about 20,000. Now, forecasts are that this employment change in general, we've had the numbers coming in for one of the longest stretch of positive employment growth periods in Australian history, longest since 1978. Now, there is some statistical chance, given some of the changes that ABS has put out, that it is going to be weaker than expected. So the number might come in a little lower than the 17K. But that being said, the Aussie dollar has been under pressure in the last couple of days, and for it to fall significantly from these levels would require a much negative number than, say, 12 or 10. If you do get a 12 or 10, then you might see the market get down again towards that 75, 70. But the bigger risk in this market at the moment, given that there is room here for the Aussie dollar to bounce, and you know that once it starts to range trade, the Aussie dollar is notoriously able to stick in some key ranges for many months. Then the previous range, which we just broke down from, is at 76.20 to 76.80 level, and we could get back up into that level. You could see the market get a bit more stable up there, go into a buy the dip sort of mood, and the crosses in particular have all been oversold as well. So that was a Kiwi tested its key 110 level overnight, and that's the main thing that you want to be watching as well in terms of the crosses. Is if there's stabilization here, then the relief rally or the profit-taking rally for the Aussie dollar could be more than a 24-hour event. All right, so the numbers forecast are 17.8. We will tell you in 10 seconds what comes out here, and just show you a little bit on how to trade that if you are going to trade it live. Just looking at the Reuters machine, come out as instantly weak. Ooh, so the statistical downside was open. The unemployment rate did jump to 4.5, so that in a sense is a buy the dip scenario, because the market is got a drop in unemployment rate, whereas the headline was a little lower, and the full-time employment was very strong, so that's definitely a buy the dip scenario. All right, so you can look to buy the Aussie, or you can look to buy the Aussie Kiwi. In the current market, there is a risk-on theme, so you could see the recovery in the dollar yen continue through the Aussie yen chart. So let's have a look at that one. Also a key level of support, so the risk reward gets better at key levels of support. All right, now we'll check in tomorrow, see how these trades go, but the 24-hour outlook is pretty solid. We'll see how the dollar yen is going to be much more reactive to the US stock market, but the stocks are also been under a little bit of relief rally in Asia so far, so we could see that continue as well. So this is Tony D from the easyMarkets dealing room in Sydney. If you want to become a member of the ATG, you can get a dealer like myself to assist you with your trades on a daily basis. You can get the contact details below and the link to the ATG if you're not a member already.